We have Powell this afternoon at 12:30. We have FOMC member at 3:30 right before the close. Powell is doing a Chamber of Commerce speech today at 12:30. I don't know if the market's going to move on that. It's highlighted, red for high impact, but the manufacturing services PMI, above 50 is a good thing, showing there's a sign of growth in the U.S. If it's under this, then that would be a sign of slowing in manufacturing, sign of slowing in services. There has been the reality of rising PMIs, rising global PMIs, and let's look at the trend here. But coming out of the German manufacturing services PMI, big jump in services PMI, 49.5 revised from 50 down to 49, 49.5 delivered at 52, manufacturing from 50 down to 48.5, and also revised lower as well. That's Germany, one of the biggest economies in Europe. UK revision was positive, but 53.4 down to 51.9, 47 down to 46. Those aren't slow drops. I mean, that's a pretty meaty chunk off of the forecast. I'm wondering what we have here for ours for 9:45 a.m. It is Tuesday. We had an outlier type Monday. We talked about that. Yesterday's masterclass that I did for Daily Profit Play was a bit different. I wanted to kind of lay out something technically different. I tried to survive the day yesterday, ended up taking a loss. The Daily Profit Play, meaning needed price to stay below 66.85. It was above that. It closed at 66.93. So not by much, but it was enough to threaten my position. I did a 90 by 95 bear call spread. I took a partial loss on that one. I did 6,700 by 05. That was a full win. So my net on the day, I shared that with the Telegram channel yesterday. Net on the day was 565. So -4, -265, plus $1, -565. Market maker move. And this is giving the market maker move a lot of credit because we saw this right at the open around 24.60. The actual yesterday was 31. Okay, 31 points. Now, that was pretty big. I mean, from the low of 66.47 to the close at 66.93. Oops, 66.47, 66.93. So the plus minus on the day from the bottom to the top, we had 46 points of intraday movement from the low to the high. Okay, or from the low to the close, I should say. But the gap lower was around 66.50. So a 66.50. Actually, I'm sorry, that was where we opened. We had a 66.60. So there's a 66.60. And then minus the 66.93 where we closed. We had about a 33.76 point move yesterday. So my numbers were a little off, but we had a previous day's open 63. Yep. So I was right. 63 to 93. There's about a 30 point move right there from plus minus. So again, expected was less than actual, or actual was greater than the expected. So premium sellers yesterday, I was surprised for a Monday, especially very surprised to see price do what it did, but it is what it is. So wasn't a terrible day, but certainly wasn't a fun day. I was annoyed that the markets did this on a Monday, especially when it's like, why can't we get this hyper direction right after the Fed? The market's going to do a bunch of noise during the Fed, and then a choppy Thursday, and then a choppy Friday, and then Monday they come out swinging like everything's great to all-time highs. Meanwhile, it was pretty much led by Apple and Nvidia yesterday. We had 49% of the stock market declining and 47 or 48% advancing. So it was a total mix in stocks yesterday, but Apple is up over 3.5%. Nvidia is up over 3.5%. And that was enough market cap at, $7+ trillion that it's like, yeah, everything goes higher. So, all right. The link you put in Telegram this morning. What did we put in Telegram for 10? Yeah, it wasn't by Tesla. Tesla didn't really do much yesterday. It was Nvidia and Apple. Those are the ones that were crushing it yesterday. If we go to FinViz, so Tesla was 1.91. It was green, but not as heavy as Nvidia and Apple. You can see your Apple's up over 4%. Nvidia almost at 4%, 3.92. Definitely led by those two yesterday. So, and that's, companies 1 and 3. I'm not sure if Apple actually might be taking over Microsoft again. Let me check market cap wise. 3.8 trillion on Apple. I think Microsoft is still 3 point something, 3.82. So Apple is closing the gap on, gosh, what a move. So I'm saying, like, after this, like, bend the knee, kiss the ring ceremony that Tim Cook did with Trump, Apple has been, back in the game as like not an underperforming Mag 7. And then Tesla, I mean, I guess the reason it jumped so aggressively is you've got Elon Musk buying 1 billion shares, but it's not just an automaker. That's my narrative. I think that a lot of, investors that like Tesla are on that same boat. This is the embodiment of AI. This is an energy play. This is AI. This is profit margins, like all these things that Tesla. I mean, this is one of the few ways to get exposure to humanoids and embodiment of AI in the public stocks. Everything else is going to be private equity. I think that's one thing that's going to be more concerning moving forward in the next 5 or 10 years is there's going to be companies that are AI driven, AI led that can make $10 billion in sales and they'll never go public because they don't need the funding. And I almost wonder if we're just going to have like this hollowed out market of like companies that are so big and so bloated and need so much capital that maybe they're less productive, maybe they're less profitable, right? Maybe the margins get a little bit tighter. Who knows? I could be totally wrong, but still, Tesla's had a good run, and I'm not stopping here. I think the Tesla has another. I don't know. We're at market cap 1.4. I can see this whole AI picture and robots when they're rolled out and autonomous vehicles and robo taxis and whatnot. I can see that being worth another $1 to $2 trillion in market cap. So I think that price doubles from here, but not without volatility. I think any type of dynamic support, I'm looking to buy it. I trade a lot of puts on Tesla. Apple, I haven't really done much with this year. I do have some shares of Apple, but my covered calls are all the way up to 230. I was selling calls in this choppy zone, and looks like I'm probably going to get it called away. I'll just keep rolling it. I'll just roll it every month or so, every 30 to 45 days. I roll my calls, but I'll just keep trying to roll it up a little bit higher. Okay. Link this morning in Telegram. All right. Sorry about that. I didn't post it. Join us here. NMC Live. Yeah, I don't know if that link was. So how'd you find it then? You found me. Um, yeah, we'll see. So, any stocks looking good? Individual stocks for just the day. I mean, that's a short-term picture. I mean, no. I'm usually if I'm looking to invest in stocks, I'm usually doing um, ratio spreads, naked puts, combo trades, and I'm not very short term. I would say if I'm investing short term, it's going to be SPY, QQQ, SPX. That's really my game. If I'm going stocks, I want to give myself enough time. I like to trade synthetics. We haven't had a segment here in a bit, but it's Technical Tuesday. We're at all-time highs. We had two stocks lead the entire market yesterday, two big winners, company number 1 and 3 in the world, Nvidia and Apple, and stocks went to all-time high in the market cap. So we did see in our scene SPX at all-time highs, SPY at all-time highs. What is this box up here? I feel like I measured 10% gain from 12-16 discussion. I think I just measured that out based on a, average performance, like average yearly performance. We're kind of right there. Doesn't mean anything. I just measure that based on the previous all-time highs. I'm still perplexed on not touching the 21 of the 50-day moving average, but obviously I've been on that same narrative for the last couple of weeks. It hasn't changed. It's just, eventually if we get a little bit of shakeout, is there a catalyst that's attached to it? This week we had PMI numbers this morning, GDP, unemployment claims, and PCE. I don't know if inflation matters on Friday. I mean, PCE, we're looking at the forecast. Let me go Bloomberg terminal here. So let's go to Friday only. And 8:30 news that drops with the U.S. We have University of Michigan dropping inflation expectations. So 1-year inflation expectations, these are so high. 5-year inflation expectations, these are lower, but it's just crazy. It's like, yep, we're going to be up to 4.8%. the previous prints. Let's go some of the, let me look at the history here. I mean, these forecasts from 5% to 4.4, 4.5, 4.9, 4.8, 4.8. I mean, they're just elevated inflation. That's not really the big picture that I'm looking at for Friday. It's going to be the core PCE. So where is that at? That's 10 a.m. for sentiment. Here's an 8:30 chunk of news. So you have a forecast? Come on, we're like 4 days away from this. So the year-over-year core PCE, there's no forecast. Previous is 2.9. If this shows over 3%, it's hard to deny that we are not seeing higher inflation. It just depends on if this is making people nervous or this is a further reinforcement of buy stocks, buy gold, buy silver, buy whatever you can get your hands on because we're in a bull market, things are good, and it's the best way to combat inflation. In fact, I do have an interesting picture here. Let me find it. Article from last week. Let me see. Let me see. It was the outperformance of stocks over inflation. So here it is. Yes. Okay. Increase over the last 50 years. So this is from September 1975 to August 2025. This is from the sources Y charts in New York University, NYU. Inflation has had a 6x increase over the last 50 years. That's a lot of inflation. 6x, meaning that life since the 1970s has essentially become, inflation has had this sneaky little theft of 6 times what it was back in the 70s. Now, granted, this is like crazy hyperinflation in the 70s. Market gets squashed, returns to normal, establishes further credibility with Paul Volcker. 3-month treasury bills. So if you're sitting in cash, you've had about an 8 times increase. So actually sitting in 3-month treasury bills, 3 months at a time, okay? So holding this year after year, you've had an 8 times increase, which is actually enough to keep pace with inflation. Not by much, but the total S&P return to the stock market, 289 times. It's not even close. So 6 times inflation, 8 times bonds, and 289 times if you're in the stock market. So it just reinforces this. The whole financial market has been financialized. If you are not participating in these financial markets, and I know it's unnecessary to force investors to take this type of risk, okay? But if you're not invested, you are going to fall behind. I just had a conversation with one of my best friends yesterday, and wouldn't it be nice to have some assets that if you own something, like if I owned, let's say 1 bar of gold, like 12 ounces of gold right now, I own it and it's worth $3,800 for that ounce, or I guess it'd be 16 ounces, a pound of gold, whatever, or whatever bars they're selling at Costco. But if you own it, right? So you have the physical gold and it's worth X. Wouldn't it be nice if I have, let's say, $4,000 worth of gold, and if I want to go out and buy something for $4,000 today, I could still keep that same bar of gold, and in 5 years, I could buy something that's worth $8,000 because that same item that's 4,000 US dollars might be worth $8,000 US dollars, but it's still the same bar of gold. That makes sense? So if I had an asset or I own something where my purchasing power isn't getting depleted, that would be nice. And I think that's what the world is kind of realizing, that we're moving towards a lesser reliance on fiat, and we're moving towards something where, the dollar isn't going to lose world reserve status. So anybody that has those newsletters and the world is ending and the sky is falling and the dollar's going to lose everything, and even Ray Dalio, love the guy, respect Bridgewater, but my gosh, I mean, he has not gotten off the tour of how bad things are going to be. I understand that a fourth turning. I understand that um, like the conflict that we have globally, the struggle that the U.S. might have at the top of the food chain to then print their way into losing world number one status, or seeing just like the change in world order, where it's like Nobody wants the dollar anymore. Nobody wants treasuries anymore because they're seen as the risk. That's like the slow melting ice cube. So people want other assets. So probably moving towards a reality of reestablishing some type of gold standard, putting something that's physically backing, the financial system that the world wants. I think gold is in a great place for this. Gold has clearly outperformed everything this year. Index wise, gold's up 40+%, silver's up 40+%. Our US market's up 13%. Our NASDAQ's up 14, 15%. Yes, we had a huge correction, but we wouldn't have had the thrust to the upside of these all-time highs without that nasty pullback in March and April. There's no way the market would have kept stretching to these highs without having some type of correction first. So anyway, I just think it's more and more apparent that we've got to be invested. And I know there's risk. There's ways to protect the downside, but the whole system has been financialized. It is unfortunate that if you're not invested in some way, shape, or form, if you're not participating in a 401k, if you're not passively investing or actively investing, it's just easy for traders to fall, or it's just easy for households to fall behind. If you're trading, investing, you can keep pace. I'd say the traditional 60-40 portfolio is a horrible balance. If you have a financial advisor and that's what they're doing is putting you in mutual funds and things that are highly correlated to the markets with little to no downside protection. If you have you in bonds based on a targeted fund of, oh, you're going to retire in 10 years. Well, here's a, 60-40, here's a 70-30, here's a 40-40-50, here's a mix. Bonds are terrible. In fact, if you go back 50 years, if you replaced bonds with gold, you'd actually be outperforming by a lot. So I have no interest in owning US bonds. If you want to sit it aside in a money market account for a year and have, no liquidity, but a safe trade, that's fine. But as far as what is gaining in value, I mean, we're looking at a technical revolution, a technological revolution right now with AI. The market is clearly hyped and excited about it. And I still think we have corrections and flushes of volatility along the way. What we have right now is clearly like on the verge of like breaking technically, which is kind of driving me crazy. I'm going to say this is what I'm blaming my decade plus of trading currencies with is like, hey, technicals matter, and then in the stock market they're like, nah, they don't matter as much. They do at some point, and I know if we have a pullback and take out the FOMC low, then it will matter. And we'll pull back to the 21 and the 50, and we'll see what price action does to play out. But having a correction is a good time to be scooping up some discounts. If you look out bigger picture, I read yesterday that some of the forecasts for some pretty good macro analysts out there, some research guys that I follow, Ed Yardani is one of them. He's talked about this like similar to the roaring 20s. This sounds like the roaring 2020s because of what we've done with fiscal policy dominance and what we're doing right now with aligning monetary policy, that we have some pretty high targets, 7,500 in the S&P, 7,700 in the S&P without anything to really derail it. So I think we stay the course. We stay invested. Any dips we look to buy. I'm just hoping we have a healthy dip. Okay. Ed, the broken wing butterfly, which one? The one that I rolled out yesterday? I rolled the broken wing butterfly out last week. I rolled that 6640 out to this Friday, and there's still a chance that one survives. I may try to roll it again, but I will not roll it for a debit. So I'm curious, what it's going to take time wise. Like I don't want to roll it out too far. If I rolled out another week or two and I can survive with a extra 50-cent credit here, that'd be fine. I can look at it this morning. The way to roll that, if you saw that in my Telegram channel for the daily profit play, that would have been posted last week. It was a pretty, yeah, here it is. So this is what I did. In the broken wing butterfly, remember, it's a combo trade. So it's a bull call spread combined with a bear call spread. So I had to roll those as individual spreads. So I'm rolling the 35 by 40. Okay, that's the bull call spread. I rolled that for a debit, and then I rolled the 40 and 55 for a credit. So you have to take the trade apart essentially and roll them like one spread at a time. So I did do that. I've got 75 cents net on the roll. So it gives me until this Friday, and I do see a price will be back below 66.40. If it's 66.40 or lower, we're in the profit trap. If it's below 66.35, then we keep the full $1.75. That's kind of my survivor level. but we're obviously above that. I mean, we're trading at 66.90 right now. It's like I need this thing to drop 50 points like now. If I can roll it out another week, maybe I get myself through the end of month, end of the quarter. Maybe we have that short-term correction. Maybe I didn't time it well enough, but I don't want to roll it for a debit and dig a deeper hole. Okay. Like if I'm going to roll it for a debit, it would be like 5 cent debit. That's all I want to pay and give myself more time. But if I could roll it for a credit, I would certainly like that. Okay. So does that make sense? So if you're in daily profit play there, Ed, take a look at your, this is posted on the 18th of September. And that's the breakdown of how we roll it, because you have to break the trade apart into two spreads, right? Because the broken wing is I'm buying the call, I'm selling the call, and I'm buying the call. So this is above price. So I have my buy here, my -2 for the sells, and then my buy here that's further apart. That's why we have the broken wing. We pulled in for credit. So what you have to do is you have to take +1, -1, roll that, and then a +1 and the same -1, because that makes up 2, and then roll that. You have to roll those separately, right? So you're likely gonna have to roll the debit spread for a debit, but you can roll the credit spread for a credit. And as long as it's a net credit, I think it's worth considering a roll. Okay. All right. Gamma levels. We've got, let me go close around 66.93. So I'll update the daily profit indicator. So let's go manual at 6693. That's the close from yesterday. There we go. So there's my 50, 100, and 150 ATR. My VIX box up to around 67, 60. The VIX is trading at 15.97. The VIX didn't even move yesterday, but we had a decent little move to the upside. Let's just calculate the numbers. I mean, we're probably not going to go all the way up to the VIX high, but a 1597 divided by 16, we've got I'm just going to put 1, 0.998. I'm just going to round to 1. And then here are my gamma levels for the day. Pretty big sticky point around 67.40. That seems like a pretty big move. Plus or minus is not 50 points today. So that's just like more flows to the upside. Gosh, I mean, I see this. It's like, it clearly looks like a price magnet. But are we going to move 50 points there today? I don't know. Obviously, we can do whatever. The market does whatever it wants. I mean, this movement yesterday from low to high was about 50 points, but it did establish a low first. So, I mean, are we going to stall somewhere between 67 and 66.70 and then just try to float our way higher? So I still think this market is very much, zombie-ish, just positive gamma, positive gamma, positive gamma. 66.70 should offer some type of support. If it doesn't, it flips to negative, then we stay out. But I just think I follow the script, follow the rules. We should not get to 67.40 today. Based on the market maker's expected move, we shouldn't get there. So if I'm in SPX for today's move, okay, plus minus on the day is about 21.5 points. IV's at 14.2, 13.7 IVX, IV rank 14.2, 22 points. Well, 67.40 is 50 plus points higher. We shouldn't get there, but that's my biggest gamma level. So obviously price can flow. We can have another day where actual is greater than expected. That shouldn't be the case, especially after yesterday. So I'm curious, just like everyone else. Plus, we have news at 9:45. I don't know if that opens up the floodgates for more bullishness or we actually see a bit of a dip. I think mechanically, I'm going to try to stick with my like 15 and 10 delta levels, get the fill that I want. And if I can fade this thing hard, it'd be at that high gamma level if we get there today. Based on the 1% move, are we going to see prices going up? I mean, that'd be way above this gamma level. But there's 67.60. This is based on the VIX at 15.97. And then same thing to the downside, going 1%. That put us around 67 or 66.30 to 66.25. Okay. So we just had opening bell. Broker should be updating things here momentarily. We'll take a stab. So not really much of a gap. See what price action does. Do I have a link to Telegram? Yes, Caroline, I do. I'll share that in a little bit. Let's bring up my other levels really quickly and see where these things are flowing to the upside. Okay, I'm going to have a look here. So right now, I mean, the 16 delta, 11 delta. So I just want you to see if we hit this delta level today, 67.40. Just want you to keep in mind how rare this would actually be. That's a 3 delta. So there is a 97 to 98% chance this will stay out of the money. That's how silly yesterday was. We literally traded to like a single digit delta, which is super, super rare. So the reason I'm saying that is I know that we shouldn't see just constant directional flows to the upside. That being said, I mean, what are we doing today? Are we going to hit new highs again today? It's very possible. Big level at 6,700. I mean, you just see like little to no put gamma whatsoever. You know, it's like this market just doesn't give a crap. It's like go higher, go higher, go higher, go higher until something tells us to do the opposite. So even going, to sell some calls today or saying like, I'll just assume I can, sell puts. Where? If I sell puts at 66.70 and 65, I'm still not getting the premium that I want. Right? If I go 66.70, okay, I get 55 cents. I've got to go much, much closer to the money. That's only 80 cents. I've got to go to 80.75. That's still not even a dollar. I mean, I'm doing a 36 delta. That's not even close to like what I want to be for a standard daily profit play to get $1.20 out of a 5 wide. You know, I mean, I'm going so close. I'm literally within 10 points of price to collect over a dollar. So I can't justify just doing bull put spreads. I think the fills are so bad. And then selling highs, it's like, okay, I want to get them out of the way. I mean, this is our high around 67.10. I would like to think that after a move today, we can't get to like maybe 2025. This is trading for 45 cents. I don't want to take 45 cents. If I'm going to take this trade, I want it for a dollar or better. You know? So if I do a standard daily profit play, 20 and 25 and 11 delta, and then I can do a 60 by 55. This one gets filled for a dollar. I think that's got a fair shake. I don't mind this trade. Okay. I'd almost rather go 25 by 30, 60 by 55, and see if this fills. I'll try it here. I'll put a pending order in for daily profit play. That way it gets me up to, this is an 8 delta call and a 12 delta put. And I'm going to try to see if one side or the other can get us filled for a buck and have this thing finish within this range for the day. So I'm going to put in here for a dollar. This will be a pending order for daily profit play. Pretty low delta in turn should give us a high probability of winning. But we need to see a price will actually fill us at the price I want. I don't want to take 440 of risk. I'd rather take the 400 of risk. So I'm going to put it in here for a buck. Okay. So that's pending. I'll throw this in the daily profit play alerts Telegram. So new trade, pending order. Today's the 23rd. We've got news coming up in about 12 minutes. This is the 67.25, 67.30, 66.60. Okay, for a dollar credit. Okay, trades in. Caroline, link for Telegram. Yep, my general Telegram is right here. I'll share that. So we have Chris Pulver Telegram. There you go. And let's float this out here for real-time levels. I had there's my 6740 for the 0DT. We've got a pretty good call wall here between this like 6700, 6715. I'd actually love to see price, fading off these levels. I mean, 6720. I mean, I did the 25 by 30 for the bear call spread. I mean, that's above the 50% ATR. Do we get there? It's like this is a pretty big call wall to be evenly distributed. It's like we have almost immediate resistance right here, but we have nothing to the downside. So I could just see it just kind of hanging out here, hanging out here, hanging out here, maybe trying to breach these call levels a little bit, but struggling. I'd say definitely struggling to get through 67, 20, 25 today. Okay. Unless this risk is rolled. But if we end up going, down a little bit, find some support, come back up to where we started, day finishes perfectly in range for us. I just want to see if we get a fill at a decent price. So I'll let kind of the day unfold. We have under 10 minutes before the PMI news comes out. Is that a mover for price today? I don't know. Maybe. Okay. But I can't sit here and say that I'm bearish today. It's like there's just no gravitation to the downside. News can maybe jump it. We see all these real-time levels. If they are dwindling, let's say that all these stripes of blues disappear, and all of a sudden these pink stripe lines grow, that would be like the negative gamma versus the positive gamma. So if positive gamma grows more aggressively, then that might be enough to move shift the tides into a little bit of a flow to the downside today, but to be determined. Okay. It's like, do we have just like it's just an open space? I would think of like maybe putting in like an iron butterfly, but yeah, there's just nothing really to kind of pin price to right now. Okay. Futures wise, I mean, we opened up kind of flat for everything. Futures is flat. NASDAQ futures down 0.12. Dow futures up a little bit. Russell futures up a little bit. Dollar index up slightly. Oil's up slightly. Gold is up more, another 1% higher. We had all-time highs again for gold. So dollar index caught a bit after FOMC retested those lows. Oil, pretty solid support around 61.50. I think oil prices by next year are probably higher. I think I've got some similar to what I do on some of my strategy tools for waterfall income. I've got a oil futures trade in that as long as price stays above $50, I'll make $220. That was for Project Options Edge. Gold and silver. Look at this thing, man. We are getting one of the bigger moves percentage wise away from this 200 moving average. Since I mean, this is like 2009, 2011. We already have a pretty high bar count. Now we're getting a pretty massive percent away. We are 16% away from the 200-day moving average. I mean, gold has just absolutely crushed it this year. And even the last 3 days, it's like gold is up pretty aggressively. I hate buying these highs, so I'm not. I'm basically just doing like either sell puts of one own shares or dollar cost averaging at these moving averages. Okay, price for the morning starting to work its way a little bit higher. Let's see. Trade I've got pending is still trading for like 62 cents. I want to see if it goes up and fills me for $1. It's a good level to sell. I mean, look at your moving averages. And again, the question is, I'll ask that question. Do you want to own gold? I'm selling puts to own gold. If you don't want to own them, then sell like the 144 and the 200. So if you want if you want to avoid assignment, I think if we bounced off of this 144 to 200, we have some type of topping pattern here. I don't know when it is. I mean, this is clearly resistance that becomes support. But even if we have a corrective move and the dollar catches a bit of a bid, we'd have some risk off trading in the stock market. But a buy at the dynamic supports, it's like you're buying any of this support, any of this support, any of this support, any of this support. You can see that the wider moving average, this is a 144 and this is a 200 EMA, exponential moving average. Those are a long ways away. Price would have to fall like 10 to 15% to find them. But that's also a spot where if I had that type of discount on gold and we keep going out, all-time highs, I'm not going to mind it. But that way, if I, don't want the assignment, there's some income I can generate from that. If I, want the assignment, then I mean, heck, sell a put here, sell a put here, sell a put here, or just put dollar cost average levels in where you don't actually have to do puts because you have to tie up all the cash. But I did this for some of my margin accounts. I put in $2,000. I did $2,000 here and $2,000 here, $2,000 here, and $2,000 here. So it's fractional shares. It's literally like 4 shares, 4 shares, 4 shares, 4 shares. So it's not like I'm taking in a bunch of shares, but it's enough to say, okay, well, I've got $8,000 with a break even of about 3,400. And if we're going back to 4,000, there's profit. Goes up to, all-time highs. I have no idea. This whole narrative on gold is now that we're at all-time highs and, I mean, technically it's like, what do you measure? At all-time highs and a blow-off fifth wave, the only thing you can measure is like maybe a 1, 2, 3 correction. And when that's done, the trend resumes, troughs out, and then we have a new, 3 and 5 wave trend going back to all-time highs. So, but yeah, I mean, look out in time. I've done a lot of like end of the years on gold, and I've done a lot of into Q1. So like December expirations, March expirations, next June expirations. Yeah, I'm going out kind of those chunks. I'm pretty bullish through the markets, through like summer of 2026, because I think that the real kind of test for next year is going to be getting through the midterms. And I don't know if Trump's going to lose a bunch of power during the midterms, but that's about the only way that people that are dissatisfied can fight back is vote against the guy. Vote against midterms and let the pendulum swing the other way. Whether that happens or not, I think both parties are a mess. But right now, we at least have a stacked Republican Party that if they want to pass things through like executive orders and declaring national emergencies on everything, they can at least drum up the initiative and the majority to pass things. And as long as we don't swing back to full Democratic power, then guess what? Nothing changes, which means the policies in place are going to persist, right? But that's the threat coming into 2026 is midterms would be like October, November, Q4. Things get disrupted a little bit. But I don't know. Something tells me that it's not going to be that extreme. I think I don't know. I think the Democrats are a complete mess. We just have a very vocal Republican Party, but they have the majority right now. Okay. All right. Price action still pretty quiet for the day. PMI is coming out in 2 minutes. We'll see if there's anything with it. It's a pretty open space here. Could the market come back down to 70? I'm going to put a trade in. Let's see. This trade would be pretty cheap. See how cheap this is. If I went to 66.70 today on a butterfly, this would be for double ups. 66.70. This was a put fly. So 15 cents. Could certainly turn that into a decent winner. It's a bit pricier here with casting a wider net, but 70 cents to make $10. See if I can take this for. Try to get this in before the news. I'm going to go 60 cents debit. 60 or 70 cents on this one. 65. Maybe 70 gets filled. You piece of crap. All right, just got filled at 70 cents. Double up. 66.60, 66.70, 66.80. It's a 10 wide butterfly. I'll post this officially for double ups. Deanna, where you at here? Double up, new trade, SPX 923 expiration, 6680, 6670, 6660, 70 cents debit, targeting 6670. Okay, and I'm probably going to throw another one on at the 50% ATR in case this thing is able to get up into 15 to 20. So I want to make sure it's still as cheap. So let me go up to a call fly. And let's go either 15 or 20 on the, I don't want to overlap my strike. So I think if I got to go maybe 10, it's more expensive. I could do the 30, 20. So that's, let me see if I can get in here for $1 or less. Is price moving on PMI? A little bit. So pin at 20, that's my 50% ATR. I'd like to do it at 15. See if I can get $1. I'm gonna try to get $1 out of this trade. I'd like to pay less, but I guess I go higher if I went 25. So sell the 25, 15, and 35. There we go. That's a little bit more fair. 70 cents debit. Try to make this equal pricing. 70 to 75 cents. Do we float up here? All right, I got another trade in for double up. I know I'm kind of audible in today, but I like at least setting a trade up here. Hopefully get some movement. SPX 923 expiration, 6715 call, 6725 call, and 6735 call. 75 cents debit. Okay, I'm looking for a net profit of 50 cents or more on those trades. So still pending on today's daily profit play. I'll just chill on that for right now. I'm looking to see if we get some afternoon or late morning flows. If price goes towards the positive negative gamma filter or the pivot at 66.70 or rallies up towards the 50% ATR at 67.20 to 25, they should be able to turn into a winner. So let me go SPX. The 60, 70, 80 is a double up put fly. This one is a double up call fly. And so watching the two of these, if one of them can offer, you know, I'd say if it offers like $2 a credit, I can take the net winner. I'm all into this trade for like $1.50. If I can get $2 a credit on one of them as a winner, I mean, they can pay up to $10 credit. So there's plenty of upside potential on the trades. Okay. So basically what I'm doing is throwing out a net to look to see if price today can get either to this level or this level. And this one cost me 75 cents. This one cost me 70. This one potentially pays me 10 at the end of the day. And this one pays me 10 at the end of the day. So there's a lot of upside potential. I just want to see if price can do something more than this. So my risk on the day would be $155 or $145. If I'm dead wrong and price is going to finish in the middle, I'm not going to make any money. But if price goes somewhere, either to the 50% ATR or the 50% ATR, give us some direction. I'm hoping Tuesday is going to give us some direction. If we get it, it's pretty easy to turn 75 cents into $2, $2.50, $3, take a net profit and be happy. Okay. So I posted that. That's officially a strategy that I use a lot for double ups. So that was a trade that just got posted there. Okay. Clean spark at $15. Chart alarm goes off. Okay, fine. Overall, pretty boring price action. Did anybody do a standard daily profit play? It was so tight to price. I mean, you'd have to sell like 15 to 20 points out of the money, and you're doing right at like the 20 deltas today to get any reasonable credit. We still haven't done anything in, 20 minutes. So price is very, very tight right now. And that's understandable. I mean, I guess since yesterday was an outlier type day, it starts off a little choppy this morning. Will we have some flows later in the morning? We're going to find out. I think that 67.40 is going to be a very tough target to reach today. I could see price between this 67, 67.10. If we get up above 67.10, that 20 to 25 butterfly that I have could be very profitable. If we end up breaking the support, rolling down to this positive negative gamma zone, 70 is my pin down there. They're in the double ups. It's technically not a double up strategy. So I didn't put them in there. Otherwise, yeah, I mean, it's because we're not setting take profits for those. That's like you got to monitor those trades for the day. So if I'm in here for 70 cents into this one for 75 cents, I can set a take profit at like 250 and see if one side will hit. So I can set this take profit. I mean, you can see the trades 60, 70, 80. You set it up as a butterfly, so they're equidistant 10 wide. So I'm buying the 66.60 put, selling two at the 66.70, buying one at the 66.80. That's my trap to the downside. The upside is a call fly, 67.15 by 25 by 35. It's 10 wide. Ideally, I'm going after 20. If we get to 67.20, that's a pretty good target today. That's the 50% ATR. So what I'll do here is I'm going to set a take profit at 250. I'll set a take profit at 250. That allows me to make just over $100. Why is this? So this one, 250 credit. I already have a closing order. What? Oh, because it's overlapping the put side. I see. All right, I'm going to cancel the daily profit play. I'll reestablish that trade. Now I can go 250 on the put fly. I'll try something a little bit bigger. Let's go 350. I'll set each fly up as a take profit of 350. Okay, so if I can make 350 on one, 350 close out, $1.45. I'm in for the debits on both. I make $205. That's okay. And that's not even waiting all the way to the end of the day. That's just we get priced to, directionally flow somewhere. So keep an eye on it. My goal is to turn this into a net profit. So if this is positive and I can take net profit on the day, I'll take anywhere between 50 to $100. Okay. Bill, you did the daily profit, like break even now. Okay. Good, good. Let me see here. Let me look at some NVIDIA. I think we're going to be a little bit choppier. I wouldn't mind throwing in, I've got a couple ratio spreads already in, but I think any, aggressive dip on NVIDIA, anything on Tesla, it's like, obviously NVIDIA is a slightly cheaper stock to own than Tesla. I think they still have let me go. Here's listen to a podcast last night. So this one, Ives is the ticker. This is Dan Ives. This guy sounds like an idiot, but he's actually a really smart tech guy. He's got 30 stocks that he rotates in and out, I think every month with this whole push towards AI. My concern is that this is, disruptive AI. This is like Kathy Wood. This is like I'm not going to chase this, right? This thing IPO'd at 25. It's actually not even an IPO. It's just an ETF. So it basically was available to the public at 25, or trading at 32. I'd like to see a dip or a pullback. I don't know if options are good on this or not. This thing just started. So this is kind of one way to get some basic exposure. Do I have any options on this? I do. I can go out to May. I mean, there's no bid price unless you're at the money. So it's not really an option trade. This is more like, do I dollar cost average into this? Let me see what the holdings include. So companies identified by the AI research report, 30 stocks in the AI field. It's not just software. Okay. So this is a little bit of everything. You want like some chips, you want some hardware, you want some data center build out, you want some AI robots, you want some humanoids, you want some blah, 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 all this stuff. I said last week or yesterday on Profit Panel, I've said this last couple of weeks, it's very difficult to be a stock picker and do it successfully. I think this year it's like the market has rewarded a lot of stock pickers by companies that have ran in a big way. You invested anything in April bottoms, April lows, April to May. You had the courage to buy things through April and May. You've been rewarded in a big, big, big way. That's great. The problem is are these all sustainable? But this is a fund that can constantly rotate. So you're not just going to get stuck holding the bag of 30 stocks that all of a sudden are not great 30 stocks. Like this can rotate. You can, pull some in, put some out, and you can keep this kind of rotation of like 30 of the top performing AI related stocks. So it's not bad. I just, like I said, I wouldn't throw a ton of money at this. If it was maybe $1,000 here and then price it out to the open. So like 1,000 here, 1,000 here, 1,000 here, maybe this thing goes up 100%. It's already up a decent chunk from the start. It's already up 29%. I mean, a pullback would be nice. I don't think this is a bad thing to have or hold. But if I put $1,000 into it and then level in for 3 areas, I don't think this is bad. I also want to see what the expense ratio is if they show it. Let's see here. Let me do a little bit more research. So Ives expense ratio, make sure it's not ripping me off. 0.75. That's a little steep. Most of your Vanguard ETFs are like 0.1, 0.16, 0.15. That's pretty pricey. But for every $100 invested, it's 75 cents. It's not the worst. But that's going to make Dan Ives a lot of money. So anyway, all right, I'll put a pin in that for right now. Daily profit play still. I mean, we've done nothing in 20 minutes. So let me look at something like NVIDIA. We're at 179. How far out can I go? This is what's going to be curious to me. How far out can we go? Let me see where my trades are right now in NVIDIA. I have some shares. I have some ratio spreads. I did some naked puts. So I have a trade out on NVIDIA. I own some shares. They're covered. I'm going to keep rolling those calls. That's out to next Friday. This is a protective put in case things get a little wild to the downside. Project Options Edge, we did a 1-to-1. This actually is a ratio spread with an additional naked put. So I do have some exposure here. This was for $4.95, so it should be just about $500 of income. And also, I'm willing to own shares at 140 and 130. So I'm willing to take up the 200 shares. I don't want to like double and triple down on this. I think that's a pretty good trade right now, but I could go out a little bit further than January. Let's go out maybe to June of next year, June of 2026. I could probably go a little bit lower on this. The expect move down to like 130, maybe get into like the 100 space. Could I buy the 105, sell the 100? I mean, I think this is a pretty good income trade if you ask me. Could I own shares of NVIDIA at $100 with a $5 profit trap? I think this is a pretty good trade. You got to wait some time on this, but if you're willing to throw out basically a naked put, 105 by 100 gives you a $5 profit trap. I'll build this trade out for you and show you what it looks like. I don't mind taking this trade out a little bit farther. Let's go option strat. Build out. This would be a put ratio spread. June. This would be NVIDIA for June of 2026. I would move these all the way down. This would be a 105 by 100. So I get to move this way down here. So 105 by 100 is that. So current price around 180. Price could drop $80. Okay. Price could drop $80. The probability of that happening is pretty slim, right? This is a 94% chance of profit. If I took shares, I'd own shares of NVIDIA at $100. I'd own it actually cheaper than that because I would get 100 assignment minus 5 on the profit trap minus the $1.30 credit. I'd own shares at $93.70. Why do I like this trade? Because the low was $86. So I could see us having a pullback in here, absolutely having a pullback in here, but I don't see a lot taking NVIDIA down below this unless it's like, hey, 10 companies just came out and made chips that are as good or better than NVIDIA. NVIDIA just took a stake in Intel. The government has a stake in Intel. NVIDIA has like a 12, I mean, for every, like, I think for every 13 chips in the world or every 10 chips in the world, like 9 of them are NVIDIA right now. It's ridiculous, like how much of advantage and moat they have right now. It could be like borrowed time. I think at some point there's gonna be some catch up. But anyway, I mean, it's an income trade. If I can turn this into a couple $100, I'll turn it into a couple $100. And I'm probably going way further out of the money than I need to, but I think it's a safe trade. Okay. So let's see. That's a decent trade. If you want to get more credit, then tighten up your ratio spread. Now you get $1.60 instead of $1.30. But I like the idea of if this is going to offer a profit trap, this also lowers my delta. If I just do a naked put, I get $1.68, but I have a 9.75 delta. If I add the ratio spread in here, and this one goes down to one contract. If I add the ratio spread, now I get $1.32. My delta goes down to 3.79. It barely moves on the beta weighted delta. So that's a much more like, to me, like a digestible way of having a naked put in the market, but taking off some of that intense delta, and it reduces that volatility. That's why I like ratio spreads. Okay, so I can sprinkle this in as a bonus trade. The 105 by 100. I don't mind this trade. I'm gonna do this on my portfolio margin accounts. So these should get the job done here, here, here. This one's okay. I've got enough cash in that IRA. And these are all margin accounts as well. So that is, so if it's $130, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So little trade. So $1,700. I think it's a pretty safe trade, about a 94% chance of profit with the ability to own the shares and flip it. I can repair it. I'm confident I'm not going to lose on this trade. I might have to own it first, but if I own it and flip it for $5 or $10 a share, I'm okay doing that. So I'll take this trade. So it would be a trade it's going to require like a naked put. So you got to have enough cash to do this trade. You'd have to have enough cash or margin to. It's going to require about $4,000 to $5,000 worth of buying power. These accounts that I'm showing you, this is a portfolio margin, so this is like a bit more leverage. But if you have just a standard margin account, this is probably going to require about $4,000 in margin. With the break-even point, it's going to be about $9,400 in cash. If you got that for cash, that still works out. Okay, I'm going to try to get filled here for $1.30. And this will officially go into my service for Project Options Edge, but you're here in the live session with me, so I can give it to you as a bonus today. Just got filled at 1:30. So that trade's filled. I'll post it in the chat. I'll give this out as a bonus trade today. So this is going to be a bonus trade. I'm throwing this in my public Telegram bonus trade. We are in the daily profit plan live session. NVIDIA is a 6/18 of 26 expiration. Buy the 105 put. Sell the 100 put. $1.30 credit. Filled. I'm willing to own NVIDIA at if price is less than 100 by expiration. Break-even price is, that would be the 100 assignment price minus the 5 on the ratio spread. It's basically a bear put spread. So it's a $5 bonus trap minus the $1.30 credit. So I own it at 93.70. With April 2025 lows around $86. So I will add covered calls to repair for profit if needed. 94% probability of profit. Okay, bonus trade. This officially is going into my Project Options Edge, but there you have it. So if you want this trade, bonus trade, I'll throw it in our Zoom chat right here so everybody can see it. There you go. So now I'm going to go on and just get filled for these other accounts. So that was trade 1. Next account. $1.30 is not filling. $1.29. I mean, this is a bid price at $1.29. Come on. Really? This has to fill at $1.29. Filled at $1.29. All right, that's fine. I'll allow it. $1.29 is getting filled across the board. That's pretty easy. 9072. $1.29 getting filled. $28. $28 getting filled. $36. Okay, it's got a couple more accounts here. All right, that's in. So now I'll update my tracker. All right, so NVIDIA, 6/18/26 expiration, buy the 105 put, sell the 100 put, $1.27 to $1.30 credit. Break even price would be 93.73. Okay. They haven't filled. Yep. So we'll let them pend. A lot of those had earnings this coming week, Oscar. Buck did a reverse. Okay. Hopefully we see some direction today. Remember, there's that dead zone. So you definitely want to see some price give you some flow today. If you're doing the reverse iron condor for today's daily profit play, you've got your dead zone here, right? You want to see price going somewhere to get outside of that 15-point dead zone. How wide you go? 90 to 05, so 15 wide. That's a good fill, man. You got 615 on that trade. That's a really good fill. Let's see. Go back to SPX today. 90 and 05. Oh yeah. Yeah. Yeah, no, that's good. That's totally manageable. That risk is manageable. We'd have to do essentially nothing on the day. Yeah, obviously yesterday was a bit of an outlier. So, I mean, we got to be prepared for something of that nature where it's like yesterday was such a random, Monday, which doesn't really happen like that. That today is a little bit more contained, right? But once we get through, 11 o'clock and Europe closes down, it's all US flows. Is there enough to drive prices somewhere, anywhere, nowhere? I don't know. But yeah, it's not a bad trade. Not at all. Otherwise, we haven't, I mean, I haven't had anything. So I'm looking to see, do we get up to this 50% ATR? Do we get down to this 50% ATR? Is there anything today that gives us some direction? I didn't even look at PMIs this morning. I know they were coming out at 9:45. What news tell us? PMIs this morning. I mean, pretty much right in line with expectations. So 54 came in 53.9, 52.2 came in 52. Slight revision downwards. I mean, not like it's not a huge rate change. US is much better position for PMI numbers than Eurozone. Eurozone had some pretty decent misses, but like I said, the story of the last couple months has been that global PMIs are rising and that yields aren't changing. If you go to US 10-year yield, it's off the lows. So I mean, we're up 14 basis points. I just don't think that we're look if the 10-year yield, and I'll just tell you this: if the 10-year yield's up above 5%, nothing's going to be good for the stock market. Like that is a clear line in the sand that if we're up to 5%, it's going to choke out growth so aggressively. The right now, like the administration wants this as low as possible. The problem is the Fed, even cutting rates, they won't change the long end of the curve. So this doesn't necessarily change. If you go to JP 10-year, the Japanese yen 10-year government bond, you talk about monetary policy behind the eight ball. The Bank of Japan is sitting at a 0.5% interest rate with 10-year yields at 1.65. I mean, that potential, like, I guess the give me one second. The potential for this like carry trade to lose some of its luster. I'm not going to say it's going to unravel like it did last summer, but the carry trade attractiveness will go down if we have, let's say, the Bank of Japan raises to 0.75 or 1%, while the U.S. is going to be cutting down to almost 3%. That makes the carry trade a little bit less negligible. That's going to deter a lot of borrowing in Japanese yen to arbitrage. So I don't know. I mean, this is the story of they're maybe looking to raise rates by the end of the year. Maybe they take this into 2026. I still think one of the more interesting trades in the currency market is if we start to see the Japanese yen get stronger, will the dollar yen be something that breaks? To me, this is just staring me in the face. This is a huge head and shoulders pattern that if we go left shoulder, head to neckline, right shoulder, if this is a channel that breaks, do we make our way back down to the neckline? The neckline gets noisy, but if we break the neckline, this to me is a 2,000 pip move. This might be one of those interesting, outliers that nobody's really talking about. No, like, because could this be like a bigger risk off trade that, like stalls the stock market? Maybe. But I think that the Bank of Japan is such a radical monetary policy all the time that unless I see this as clear as day on my currency charts, I can't make this prediction. Okay. All right. What do we have here? Bill says DPP 145 out at 125. Good. How wide you go there, Bill? For a buck 45, are you 5 wide, 10 wide? Just curious. I mean, prices cooperated beautifully for 45 minutes. I was just curious, like what structure, how far you went out of the money, what were your deltas? We're sitting pretty tight right now. I mean, my 35.42, it's like we're very tight on the sentiment right now. There's not really a winner either direction. But like I said, if we have price going somewhere today, it just depends on if we can break this opening bell range. We break the range. Can we go to the 50%? Can we go down to this 50%? That's usually an attractive target for price action for the day. If obviously we go nowhere for the day, then okay, I've got a cheap butterfly up here. Got a cheap butterfly up here. My daily profit play, I wanted $1. It's not offering $1. So I'm just not forcing a trade. I'm gonna look to see if we get a break. Those butterfly spreads hopefully offer us up some flow, to the upside or the downside. Let's get something. 45, 60. So you went 15 wide on the put side, 10 wide on the call side. Okay. 10 wide, 15 delta, regular DPP out, says Dr. Barnes. Gotcha. Okay, good stuff, man. Good trading. Good trading. Okay. So bonus trade for NVIDIA. Double ups have 2 butterfly spreads. Daily profit play, I still haven't been filled. I'm just going to hang out and wait. There might not be a lot of direction today after yesterday's kind of, aggressive Monday. I guess I can say that it was an aggressive Monday. It was a rare example of like Mondays being directional. Usually that's not the case ever. But now Tuesday is like, nothing. There's clearly what is looking to be like a heavy resistance around 6,700. I'm curious if if this little structure today breaks or fails. If it goes nowhere, then we'll do the same thing tomorrow. If we get direction, we're going to go somewhere. But so far, it's done next to nothing. Okay. If there's one more way I could tackle this thing, 95 and 95, 05 and 0. So I go 10 wide. I can pull in, 775 in this trade. I mean, that'd be 10 wide. It's like I get almost $8 of credit. I'd be risking maximum of 2 and see if I can just get time decay to work this out. I don't mind this trade if we just stay right here. But the issue is I'm not super confident we're going to stay at 66.95 for the entire day. So I do like this trade if I had like a big pivot level or a big gamma level, but I don't have that at all. So this is an iron butterfly. I talked about this, for some, butterfly spread discussions. I don't mind this trade, but I would take this trade maybe at like an $8.50 credit or a $9 credit, like a lot of credit offered, so very little risk. But for right now, it's like I'm not super confident that for more than maybe, I guess for like the next 30 to 45 minutes, if it stays where it is right now, this could offer 70 cents to $1 profit. But you're risking 225 to make 10. If it stays right where it is, we can make $10 minus the credit. So I'll kind of keep an eye on it. I don't know if I'm going to force that trade. That would give me, in a way, it kind of give me an attractive way to kind of net out the entire day. If we go nowhere, I can turn this into profit. We go somewhere, I can turn this into profit. But then my risk goes from 145 now up to like almost, let's see, $375 of total risk. It's like I need to have one of these trades be perfect in order to net a winner. I think there's just a little bit too much risk in this middle section. So I'll probably just hang out. None of the indexes are correlating with other. NAS selling, Dow is up, SPX range bound. Yeah, I get it. It's an odd day. It is what it is. It's just like it's another day where it's like if things aren't making sense or I'm not getting any flows, I'm not going to force a trade. I looked at this morning. I was doing like 10 deltas. I'm willing to let price come to me. It doesn't look like price wants to go anywhere. Okay, what's going to have to happen later in the day? I don't know. If price does this all day, what a great daily profit play day. I just didn't feel like I didn't want to sell like 10 points out of the money, So I'm going to look to see, is there any type of direction today? And if so, where are the levels? 50% ATR, 50% ATR. Those are gettable targets every single day. Is this going to go here or here? If I'm wrong, the most I can lose today is $145. If I'm right in any way, shape, or form, this has potential to pay me $1,000 and $1,000, enough to cover my risk and hopefully walk away with a few $100 profit. Right? Are we going to stay in literally like a 5-point range for the entire trading day? Probably not. Probably not. So I think this is something I'm just going to kind of let unfold through the day, not force a trade, and then see if I can let, price take off where it needs to go, price do what it needs to do, and make a trade from there versus forcing right now. Okay. AMKR. I'll check that. I don't know what that is. AMKR. Amcor Tech. Semiconductors. Well, I hope you bought it back in April. I mean, that's a great trade, along with countless other stocks that have ripped since April. I mean, it's up over triple digits, I'm pretty sure, 113%. I wouldn't want to buy it here. I just think like maybe selling puts if you like it. Fundamentally, I'll show you where I think it could be. So here's Simply Wall Street, AMKR. I mean, Snowflake looks pretty good. Earnings forecast to grow, trading good value. Price is cheaper than the semiconductor industry at 24 times earnings. That's not bad. Fair market value. This is what I don't love, however. I don't know why this is the case, but based on the discounted cash flow model, current price is around $30 and fair value is 8. So, that's one of those individual stocks from like, I don't really like AMKR as an individual stock, even though it's performing very well. I'd rather trade SMH. Okay. There's SMH, which is kind of the whole semiconductor space, or there's SMHX, which is let me look at this thing. So what is this? This is like the hardware side. Okay. High value design chip development. They avoid the high cost of in-house manufacturing by leveraging expertise third-party foundries. And I don't know where these are at. U.S. index is only U.S. Listed securities. I don't know if they're doing like foundries non-U.S. Could there be like tariff issues or supply chain issues? Maybe. I don't know. Capped at 20%. So you can't have NVIDIA have like, I mean, it probably is NVIDIA at 20% of this thing, but rebalance semi-annually March and September. So SMH, a little bit more history on this one, but selling puts, the thing's up 92%. Just more in like the overall space to have somewhat, hopefully, more resiliency than just an individual stock. So anyway, food for thought. I don't know what AMKR is. I just know that this is a red flag for me. So I can't say yay or nay. It's like I just would not trade it. That's just me. I'd rather look at SMH or SMHX, where there's other ways to participate with not just an AMKR, but maybe 100 other companies that are producing chips in that same arena. Okay. APLD, Applied Digital. I mean, do you just want to feed me a bunch of FOMO trades? Check on the stock that's up 100%. It's up 700%. What are you possibly going to do with this thing? Chase it? No thanks. I mean, I hope you're in it. I hope you're in it for any of that 700% gain. Again, red flag, like volatile share price, significant insider selling. Price to earnings is probably outrageous. 45 times price to sales. There's no discounted cash flow model. I don't know where this thing's fairly valued. So it's like, are you in it already, or are you looking at it now? I don't have any interest in something where it's like, I don't have a value on this. Where do I sell a put? 15? And then I want to own this thing. Maybe it's trash. Maybe it's worthless. I don't think I can sell a put for $4 and be happy with this trade. So that was what? APLD. Options on APLD. Let's go out to June of next year. Okay. There's no bid prices at a put level that I'd be interested in doing. If I did a ratio spread, 11/10, I mean, that's not a bad trade for 80 cents, but that's about the only way I would say would be fair to take this trade. It's essentially a naked put. But if I own the shares, it's like, is it a good value? If I own the shares at $8, is it a good value? I mean, it is if it goes higher, but if it's garbage, it comes back down to $3, I'm screwed. So I don't have a good trade on this thing when it's up 700%. If you think it can keep going, then you can toss some risk capital at it and hope for the best. But I just don't have a good plan on that. So, I mean, anything that's already up triple digits, I'm hoping that you're already in those stocks. I mean, if I've never heard of the stock and there's no discounted cash flow, there's no, fair value, I'm not chasing anything in these markets. I'd rather trade an ETF. I'd rather trade an index. I'd rather trade a lot of things other than picking individual stocks that are already out racing by a long shot. And this is how many standard deviations above norm? Probably 5, 10 times above norm. All right, we're breaking 66.90. That's what I needed yesterday, you piece of crap market. All right, are we breaking? Let's see what happens here. Are we going to break this level for the morning? We're still not free and clear the opening range breakout. I'm looking at this like in the next 5 minutes. So we still have a high for the day and a low for the day for the first 60 minutes of trading. Is it just going to stay in here for a while? Maybe. That's a very quiet day with a VIX at 16.27. Like, what the fudge? VIX at 16.27 and price is going nowhere today. Doesn't make a lot of sense to me. So I'm fine, like, exercising some caution. If we get a move, butterflies are great. But that's the type of move that, I mean, yesterday was the opposite. The actual was greater than the expected. This is the day today that things are excessively tight right now, and it's already 60 minutes into the day. It's like, I'm not going to force a daily profit play trade. I want to see a price actually go somewhere. So, all right. Rode the way up, bagged $800. Good. I mean, that's what I was hoping for. Is you're giving me stocks that have made these ridiculous runs. Then yeah, I mean, trailing stop losses on things that are up 200, 300, 400, 500%. Trap some profits. How often do you get deliveries of profits like that? Hey, I bought this stock, I didn't even know what it was, and it's up 500%. Trail it. Put a stop loss in, because I have no idea if this thing runs to the moon or if this thing comes back to trash at single digits. But I don't have anything good from the fundamental side to say where I could, apply some puts or actually position a trade. So it's just one of those trades where if you're in it, awesome, enjoy the profits, trail it, see if it goes higher. But certainly not something I would put a trade on right now. Okay. All right. I do have, so masterclass yesterday. Let me update the schedule for today. So we did a daily profit play, Monday masterclass. I'm also doing a Friday masterclass at 1 p.m. Eastern time. Waterfall income. I'm doing a masterclass today, Tuesday masterclass, and a Thursday masterclass at 1 p.m. Eastern time. So if you'd like to join me for that today, you're more than welcome to. From our Waterfall income members, today is going to be a strategy 1. So Tuesday is going to be an S1 review, and Thursday is going to be an S2 review. So that's my strategy 1, strategy 2. We have 12 open positions right now. We've taken 3 winners in the last couple of weeks. We have 93% of our trades or better have been winners. We have, of the 12 open positions, 11 of them are in profit. We have one that we're watching for the end of the month. I rolled that out to October. That's a 66.40. I'm hoping that trade actually works out just fine for us. That has a $500 profit trap. It's a $2.90 credit as well. So we'll see if we can make like $290 or even get lucky on a profit trap for maybe close to $800. We'll see. But I need price to get below 66.40 on that. So anyway, we trade every Monday. Yesterday was a live session. The trade I posted yesterday is live and still valid. You're welcome to take that trade today. The legs on that, it's an SPX trade. It's still good. But if you'd like to jump into the masterclass today at 1 p.m. or Thursday at 1 p.m. or both, obviously, strategy 1, strategy 2, I'd love to have you in the class. So let's talk about it. And we'll keep an eye on the trades today. I'm looking to see if we get out of this little tiny range. We've been in literally a 9-point range for the entire morning for the hour and a half we've been together so far. Give me 1 second here. I have, let's see. Okay. So waterfall income, 93% on our live trades and winners. We have 92 winning trades we've clocked. We have 12 trades running. We have 11 of them in profit. We're looking to get well over 100 winners in the service, hopefully in the next maybe 30 to 60 days. Average return on risk is about 16%. And hold time varies. Strategy one hold time is around 11 days. Strategy two hold time is around 30 days, 30 to 45 days. So again, we'll explain that all in the masterclass and why they're different. If you want to check out the terms, conditions, disclaimers, check it out on our Trading Pub homepage. Okay. Zoom address via Classroom. Yeah, it'll be in your one-click trading member portal. You can just click on the link for masterclasses. As always in trading, like I said, this is one of my favorite strategies. This is literally going to be my retirement strategy. One of the best ways for me to be actively retiring. And I say active meaning like I'm only going to trade like spot check once a week. I'm probably not going to day trade when I'm like, sitting on enough assets just to passively manage my portfolio. But my edge in trading is to help give myself an edge to carve out some profits week after week, month after month, year after year. And the same thing for you that are following me, just trying to do whatever it takes to make some money. Okay. You need to be comfortable emotionally taking wins, expecting to win, taking losses gracefully, and having it be defined risk. No trade is worth blowing up your account on. I had a futures trader in my Discord service yesterday that almost lost a $25,000 account because he basically doubled, tripled, quadrupled down in his futures prop account and almost blew up his entire account with like a 10% drawdown. So it's so easy to manage risk like a fool. When in reality, it's like yesterday is a good example. I lost yesterday. I took it in stride. I was down $560. Okay, fine. I'll survive. I'll figure out how to carve it back. It might take me 3, 4, 5 days, but I know how to get back into black. I know how to win, right? We know how to take winning trades. Just keep sticking to the process. So I appreciate everyone being here today. I've been in the market for a long time. This is now 25 plus years in the market. 1 second. 25 plus years in the market. I have seen a thing or two. I trade everything: indexes, stocks, options, futures, scores, cryptos. I've been teaching traders for over a decade. What have we been watching the last couple of, let's say the last 6 to 12 months? Okay. What's been happening in the last few months has been really alarming, probably, I don't know, foolish. We're operating at a deficit like it's crisis level. Governments around the world have become more reckless than ever. I've got 5 trillion yuan to backstop the Chinese real estate market and stock prices to get just basically ventilate the property markets, backstop the stock prices. I've been bullish on China since last 2 years. It's paid well. It's been a long process to get some of these big pushes, but I've got about 5 stocks I'm invested in. That's kind of my exposure, no more than that, but they paid pretty well. Eurozone came out of austerity for the first time in almost a decade. So $1.1 trillion on defense spending. We've got a lot of repatriation going on this year with kind of this move away from the dollar, and trade deals that are just like, who's got the best deal? Who's got the best for energy? Who's got the best for AI? Who's defense spending is Germany and the Eurozone right now. U.S. government, we are in this regime where we want to grow. We're trying to, we at first we tried to be practicing austerity. Now we're trying to grow. At some point, if that fails, we're going to try to print. I think it inevitably leads to this. Stick your inflation. Doesn't have to be higher. Doesn't have to be a crash in inflation. Doesn't have to be 1970s all over again. But I don't think inflation is going lower. I think the cost of things will continue to be persistently higher. And that is annoying. We have now had persistent inflation that everyone's been paying attention to. Everyone's been feeling every single year for the last 5 years. Okay. We peaked at 9+%. And then we've come down into the sub 3s, but we're not 2. We're not sub 2 what the Fed is trying to tell us is their mandated target. We're not even close to that. So, I mean, I think all of you care about your money. I certainly do. Your family's financial future. So pay attention. So this is an income technique that stacks up over time to help get ahead of the rising cost of living, to help outpace inflation. As I read you before, 6 times inflation over 50 years, 8 times bonds over the last 50 years, 289 times stock market gains at the last 50 years. If you want to get ahead, investing is a good way to do it. If you want to fall behind, stay out of the stock market because you think it's too risky. I don't think you have a choice. I think this is that whole acronym TINA. There is no alternative. You have to be invested in some way, shape, or form in order just to keep pace with the debasement of loss of purchasing power. But there's ways to trade it to leverage that to make more money. Okay. By the end of today's broadcast, you can join me for a trade that I took yesterday. That's a live trade. That's one of our 12 that are active right now. That's hopefully going to be closed out with our 93rd. We're actually on pace to have like 105 winning trades here in the next like 30 to 60 days. So before we get started, I want you to think about this. This is some of the risk capital we're talking about today. If you're comfortable risking up to $5,000 a trade, $1,000 per week is gettable. We're looking at about a 20% return on risk. Okay. So that's one trade, one ticker, same time each week. And I'm being literal when I say this. Monday, March 4th, this is 2024. The trade, I post these trades every Monday at noon. We have a live session at 11:30, so we can talk a little shop, review our open positions. And by noon on Mondays, we're taking the same trade, same strategies, either strategy 1 or strategy 2, which I will teach you this week in the master classes. Shut down your computer the rest of the week. When everything works out, that $5,000 investment, $11.44 in income a few days later. Monday, March 11th, same time, same place, like clockwork. A few days go by. Trade automatically closes out for us. $11.86 in our brokerage account with that same $5,000 starting stake. Very next week, third week in March, same time, rinse and repeat. $12.97 in income with that same $5,000 risk. Final Monday was no different. Same time, same place, same ticker. $11.50 in extra income. The stock even went down. It didn't matter. We had almost $4,800 in profit during the month of March on the same trade, same ticker, same time each week, like clockwork. My favorite. So I call these weekly income payouts weekly windfalls. They have the power to pay us. They have had the power to pay us up, down, sideways. For the last 12 years, we have not had a straight bull market. We've had sideways, we've had chops, we've had volatility, we've had 20+% corrections. In fact, we've had 7 of them, 7 corrections of over 20% in the last 12 years, and we've still had a 97% win rate with this service and strategy. That to me is like one of the best strategies that I would put up against anything. Anybody at this company, give me a better track record. I don't think we can, and do that with risk-defined trades, which I do. Not naked puts, not you can roll, not you can buy yourself more time, risk-defined trades. So what does that look like? If we have 100 trades together in the service, we're hopefully going to be winning 97 of them. Now, already live, I've taken some discretionary losses. I'm going to be at like 94 out of 100 in real live trades we've taken together. So with numbers like that, you can see why I'm excited to share this with you. So I will reveal what we trade every Monday at noon. Okay. And before we go any further, let me be clear. There's no guarantee in the markets. Okay. I know that I can't control the future. I know the market can be unpredictable. This is not gambling. This certainly isn't over leveraging. This is a technique that is designed for steady, reliable income. Okay. This is a realistic approach that's going to give us hopefully a chance to target some steady income on a weekly basis. It doesn't matter if you have a multi-million-dollar retirement account. It doesn't matter if you're starting out with a few hundred, a few $1,000s. Starting somewhere is certainly better than nothing. And I will teach everybody this technique. So brokerage account, permission to trade options, connected to the internet or your broker app, and a couple minutes with me every Monday. If you want to trade with me live, we go live at 11:30 a.m. You want to trade with me with just getting the alerts. The trade is posted by noon on Mondays. So it's pretty easy, but if you want it to be easier, then you can jump into my live session.